Hello students. So in last class we completed share capital and debenture chapter. Now let's begin our new chapter, that is acceptance of deposits. So chapter name is acceptance of deposits. It's not public deposit. Public deposits means deposits accepted from the public. But this chapter won't speak about only public deposits. It will speak about all types of deposits. So not all companies are allowed to accept deposits from public. Only a prescribed companies. Say for suppose eligible company, a public company, meeting the financial requirements can only accept deposits from public. And what about remaining companies like private companies or ineligible public companies? They can accept deposit from its members. So this chapter, acceptance of deposit, this speaks about all types of deposits, not only public deposit. So here you can see, it starts with section 73, ends with 76A. So you can find five sections: 73, 74, 75, 76, and 76A. So very small chapter, but from exam point of view, it is having a weightage of nearly 6 marks. So small chapter, just five sections giving you 6 marks. So that's what, important. That's what very, very important. And very simple chapter also. Let's begin our discussion with this deposit. What deposit? So what is meant by a deposit? Ultimately, companies, to meet their day-to-day requirements or to meet their expansion criteria, definitely they need funds. So how they will raise funds? So they had multiple options like issue of shares, issue of debentures, and alternate source of finance is acceptance of deposits. So shares, debentures, deposits, you can observe. So whenever company need funds, obviously they will go to company directors will go to the company owners, company members, equity shareholders. So we need funds. Can you invest? If members are ready, definitely, company will offer shares to them, popularly known as rights issue. We discussed that concept under section 62 of the Companies Act, right? And second one, company can go to bank and company can borrow funds. Company can directly go to the bank, company can borrow funds from the banker, yes or no? Or company may issue debentures to the public. So now these debentures or loans from the banks represent debt. It represent debt. Next one, the third source of finance is a deposit. Here, company will invite interested candidates to to deposit their money. So here, just it will invite the persons. It will invite the persons, and interested persons will come and they will deposit their money with company, and company will accept the deposits. Are you all getting my point? Now, if you observe, sir, deposit is also one type of debt to the company, right, sir? Yes, ma. Yes. And why company will go to deposit, sir? Company can issue shares to the equity shareholders and company can raise my easy money. No, sir. Yes, your answer is also correct. But the point is, the shareholders are the owners of the company and they are, risk takers. Yes or no? So persons generally who take high risk, they will expect more and more reward. Understood? Now, company, if it is generating profits in a good manner, if profits are in increasing trend, definitely, they will do that same thing. But, future is uncertain. How many of you predicted? Yes, in 2020, yes, global economy will fall because of, COVID pandemic. Yes or no? At that point of time, just money for their basic requirements. Many people, they earn money only for basic requirements. Yes or no? So future is uncertain. As of now, we are having very good profits, correct? But future is uncertain. So too much issue of equity shares is definitely a risky activity. Understood? Next one, issue of debentures or taking loan from the banks and deposits. Both look like same. So debentures, deposits look like same, but there is a some unique difference. Some unique characteristics are given to the deposits. Say for suppose in issue of debentures, you can observe prospectus. If I'm going to public at a lodge, if I'm going to public at a lodge, yes, I'm offering debentures. I need to prepare prospectus. I need to register the prospectus with SEBI. I need to file it with ROC, and then I will issue the prospectus to the public at a lodge. Or I may offer debentures under private placement. Yes, that option is also available to me. Correct, that option is also available to me. But in deposits, that much lengthy requirement, preparation of prospectus or preparation of private placement document, registration of prospectus with SEBI, filing of prospectus with ROC, all these points I'm not going to do. Very simple. I'll make an advertisement. If I'm an eligible company, I'll make an advertisement. If I'm not other than eligible company, I'll prepare a document and I'll issue the document to the members. So popularly known as circular. Understood. And only interested candidates will deposit their money. Company will accept such deposits. So debentures generally, I may issue debentures for a tenure up to 10 years. Coming to the debentures, I may issue debentures for a tenure up to 10 years. Whereas for deposits, maximum tenure is 36 months, 3 years, maximum 3 years, and minimum 6 months, maximum 36 months. And debenture comes under the definition of security. Debenture comes under the definition of security. The person who files an application with company will issue a security called debenture security. It is freely tradable. It is marketable security. That means, today I filed an application for one debenture. I got a debenture, but I need funds. After few days, suppose I'm facing financial crunch. I need funds. What I can do? I can sell this debenture in market. I can get ready money. But coming to the deposit, it is not like that. Suppose if I invest a deposit for a fixed tenure of 9 months or 12 months, I need to wait until the time period is expired. Or else, premature termination is also possible. That we'll discuss. But the point is, deposit is not a marketable instrument. Debenture is a marketable instrument. That's why, when you compare debentures and deposits, companies will pay high rate of interest compared to these debentures. So two primary differences, issue requirements is entirely different with respect to debentures as well as deposits. And then tenure also matters. Next one, debentures are tradable, whereas deposits are not tradable instruments. Whoever deposit, to them, company will issue deposit receipt. Are you all getting my point? So this is also one source of finance. Company will accept deposits to meet their requirements. Generally, short term or long term. Short term is 6 months. Long term is maximum 36 months. Let's see the chapter introduction. Acceptance of deposits from the members as well as public at large are an important source of finance for the corporate sector. It is therefore necessary to control the companies which invite deposits in order to safeguard the general and wider interest of all those persons who provide deposits out of their precious savings, right? The statutory provisions as contained in section 73 to 76A of Companies Act 2013 herein after referred to as the act. That means, wherever you find the word act in this chapter, the act, it refers to Companies Act 2013, and Company Acceptance of Deposit Rules 2014 herein referred to as the rules govern the acceptance of deposits and also renewal thereof. So let me tell you one point. So this Companies Act, when you read this entire Companies Act, you will get to know that entire Companies Act, it is placing a number of restrictions, a number of regulatory requirements on the company. Company do these activities. Company don't do these activities. Why? Because today company is doing business with the money of members, money of debenture holders, money of public. So all this money belongs to public. So here, placing these rules and regulations on the company is what is the main motto of placing these many rules and regulations, sir? Simply protecting public, sir, or simply protecting persons who are investing their funds into the company. Yes, that is the main objective of the Companies Act. That is the main objective of the Companies Act. If you read this entire paragraph, you will come to know. And in this chapter, we are going to discuss some 3 to 4 things. One is, who can accept deposits from whom? So who can accept deposits from whom? And the procedure to accept deposits. Next one, penal provisions if you violate the mentioned regulations. If you violate any regulation, then penal consequences. So all these things we are going to discuss in this chapter. So let's begin with the question number 1. Explain the meaning of the term deposit under Companies Act 2013 and definition. The term deposit includes any receipt of money by way of deposit or loan or in any other form by a company, but does not include such categories of amount as may be prescribed in consultation with the Reserve Bank of India. So very simple definition, but many people will confused after reading this definition. So what lawmaker is trying to explain, what lawmaker is trying to tell you is deposit includes, that means it is inclusive definition, any receipt of money by way of deposit or loan or in any other form. So this any other form, don't think like this, sir. Suppose, I sold one article to the customer. From customer, I received money, sir. I received money from customer. Now, is this, this receipt of money from customer, is it also treated as deposit? No. Any other form, this is a general word, and the meaning of any other form should be interpreted from, deposit or loan. So company is receiving money, it's a debt to the company. Now that debt is nothing but deposit. The primary understanding of reading this definition is any receipt of money in the form of loan or in the form of deposit or in any other form will be treated as deposit. But it excludes certain categories of amounts. Yes, lawmaker gave us certain categories. All these categories were prescribed after consulting with the Reserve Bank of India. And I wondered why RBI name was involved here. If you read equity share, if you read equity share concept, preference share concept, debenture concept, there you can't find word Reserve Bank of India. Whereas, particularly in this chapter, you will find the word Reserve Bank of India. Why, sir? Why? The reason is very simple. Banks as well as, non-banking financial institutions are accepting deposits. Banks, NBFC, they are accepting deposits. Now this chapter is not applicable to banks as well as NBFC. This chapter is applicable only to the corporate bodies, non-banks, Reliance Industry Limited, Tata Consultancy Services. So these companies, so Companies Act is speaking about these companies, not with respect to SBI, Axis Bank, ICICI Bank. No, these are not involved. Fine. Now the point is, today people are investing funds, people are depositing their money in Reliance Industry Limited. Why? So why? Because Reliance is offering more rate of interest compared to SBI. And why Reliance is accepting deposits, sir? Why can't they go and borrow money from SBI? Because SBI, the rate of interest charged by SBI is very high. Rate, on business loans, the bank rate is very high. So now company is thinking, yes, we are having credibility in the market. If we invite deposits, we can receive money at cheaper rates compared to bank rate. And from public point of view, why they make deposit with the Reliance Industry? Why not with SBI, sir? Because Reliance is offering the high rate of interest compared to SBI rate. Don't get worried, don't get confused. If you go to SBI, if you make FD in SBI, you may get some 6% interest. 6% per annum interest. Understood? Or if you go to SBI for the purpose of loan, sir, I need money to finance my business. They may charge you some 10 to 12%. So on savings or on FDs, they will pay 6% interest. On loans, they will charge 10 to 12% interest. That balance is their profit. You're getting my point. Now from Reliance Industry point of view, just think, going to bank, getting finance at 10% better, or accepting deposits from public at 8% interest better. Sir, 8% is better, sir. That's why Reliance will offer, Reliance will invite public to deposit their savings. Are you getting my point? Yes or no? And people will invest their funds in Reliance because they're getting 2% extra compared to SBI rate. Are you all getting my point? Now, if this Reliance Industry Limited, if they increase rate of interest, some 8% or 9%, and accepting more and more deposits, what happen? General public, whatever savings they are having, they will deposit entire money in Reliance Industry Limited. Now you can't find money in the economy. All money will be in Reliance company only, because it is paying, some 8%, 9% interest. Now concentration of money, who is handling huge money, sir? Corporate entities. Now in banking system, you'll observe less money, and in corporate entities like Reliance Industry Limited, yes, they're having huge money, which is not good to the economy. Money flotation should be there. So in economy, keep on money supply should be there. So blocking funds with a certain company, with one or two companies, is not correct. So banking segment is involved. That's why with respect to deposits, Reserve Bank of India permissions also required. I'm talking about this chapter. I'm not talking about companies. So particularly with this chapter, any amendment if lawmaker want to do, he will do only after consulting with after taking consultation with Reserve Bank of India. Okay, fine. Now let's decode the definition. I read the definition, but let's decode the definition. The above definition of deposit is inclusive one. Yes, it includes all categories. Whatever money received by the company by way of deposit, by way of loan, or in any other form, we call it as deposit. And repayment of deposit is time bound. Yes, company will accept deposits for 6 months, 9 months, 12 months, anything, minimum 6 months, maximum 36 months. After this time period, company won't renew, company has to repay that money. So this is one more difference between SBI deposits. SBI, deposit with bank, deposit with company. In bank, automatic renewal concept is there. Suppose I made 3 months FD. After 3 months, I don't want to withdraw money. Another 3 months, roll over. Another FD will be created. Principal plus interest component, put together, new FD. Whereas coming to the companies, automatic renewal concept is not there. After completion of the time period, company has to pay that money, and if depositor holder is not traceable, keep that funds in a separate bank account, wait for 7 years. After then transfer that fund to an IEPF account, Investor Education and Protection Fund, which we will discuss in dividends chapter section 125. Are you all getting my point, students? So this is a time bound concept. Automatic renewal is not there. It can be secured or unsecured. Secured means by way of creation of charge on only tangible assets. So what is this charge, security, unsecured? All these concepts we will discuss in charges chapter. It does not include prescribed categories of amounts given under the rules, Rule 2, Sub-Rule 1, Clause C. A private company can accept deposits from its members only. A public company can accept deposits from its members and also from public if it fulfills these certain parameters. So this thing I'll discuss under section 76, and point 6 we will discuss under 73. You'll get to know what is what, all the points, don't worry, but after completion of chapter you'll get to know everything. So let's begin. What are the class or classes of transactions which are not covered under deposits chapter? If you read the definition of deposit, it is an inclusive one. It covers all the monies received by the company in the form of loan or deposit or in any other form, right? But from this category, from this definition, certain class or classes of transactions are excluded. Sir, what it indicates? Exclusion means what, sir? Excluding something, something we are excluding from the definition of deposit. It means what, sir? It means the provisions of section 73 to 76A are not applicable to those amounts. So the main reason why we need to define deposit is chapter number 5, acceptance of deposit provisions will apply only to the deposit, and these rules and regulations are not applicable to the other amounts. Now what are those other amounts, sir? Let's begin our discussion. So see the point, ma? See the point? Following categories of amounts are not considered as deposit. First one, amount received from government or guaranteed by the government. So company receiving any financial assistance from the government. So company is getting any financial assistance in the form of loan or in the form of any credit, any guarantee. So all those amounts are not at all treated as, they are not treated as deposits. So first point, any amount received from the government. First one, here government means both central government as well as state government. Two governments are covered, any state government or any central government. If you are getting money, that money, even though it is a debt to the company, it is not a deposit. Next one, guaranteed by the government from any other source whose repayment is guaranteed by the central government or a state government. Suppose I am getting money from a State Bank of India, but it was guaranteed by central government. Then also this loan amount is not treated as deposit, or any local authority, any amount received from the local authority or any amount received from the statutory authority constituted under an act of parliament or a state legislature. So all these are loans to the company, even though they looks like a deposit, but they are not deposits. That means this chapter provisions are not applicable to this point. Next, second one, foreign government. Foreign government, any amount received from the foreign governments, foreign or foreign international banks, multilateral financial institutions, etc., subject to FEMA, Foreign Exchange Management Act 1999, and the rules and regulations made thereunder. Simply, sir, I'm getting money from foreign government, sir. I'm getting loan from foreign government, sir. Is it a deposit or not a deposit? I can't tell. The second question is, are you complying FEMA or not? Sir, I'm complying FEMA guidelines, I'm complying FEMA rules, and I'm getting money from the foreign government, sir. Yes. Suppose if you take, Infosys company, it is not only operating in India, it is operating worldwide. Now, Infosys company, it received some financial assistance from foreign government. Now, that loan amount is not treated as a deposit. Third point, loan from banks. Any amount received as a loan or a facility from any banking company or from State Bank of India or its subsidiary banks or from a notified banking institution or from any cooperative banks. So they are also not treated as deposits. They are simply loans to the company. Next one, loan from public financial institution like LIC. Suppose I borrowed some 1 crore from LIC. Now this is also a loan. This is not a deposit. So amounts received as a loan or a financial assistance from the public financial institutions, they are also not treated as deposits. Next one, commercial papers. Any amount received against issue of commercial paper or any other instrument issued in accordance with the guidelines or notification issued by the Reserve Bank of India. See, what is this commercial paper, sir? See, this is a promissory note issued for meeting short-term needs. This is one kind of promissory note issued to meet my short-term needs. So you can observe these instruments in money markets, ma. So these are also, borrowings to the company. They are not treated as deposits. Understood? Now, if you observe first 5 points, borrowings from government, foreign government, banks, public financial institutions, and then commercial issue of commercial papers. This comes under security. So you can remember easily, first 4 points from the parties. I will include the sixth point also. Just let me complete sixth point. Intercompany loans. Any amount received by a company from any other company. Suppose, Reliance Industry, Adani Group, you can observe. So Adani Ports is getting finance from Adani Housing Company, Adani Power or Adani Finance. Suppose, very simple, Adani Power, there is a company Adani Power, it is getting finance from Adani Ports. Now, is it a deposit to Adani Power, sir? No, it is not a deposit. It is just a loan. Understood? So you can easily remember these 5 points. Parties. First one, government. Next one, foreign government, banks, public financial institutions, and then next one, companies. So these are parties. And don't think that this question will be asked for 6 marks or 7 marks directly. List out the categories of categories of transactions which are not treated as deposit. You won't get question like that. They will ask you true or false question. They will make a statement. They will give one statement and they will ask you, is it a deposit or not? If yes, tell me the reason. If not, tell me the reason. So true or false point of view, this concept is important. They may ask you only one question, one question out of these 18 points. They will give you some 1 or 2 points and they will ask you whether is it a deposit or not. If you observe last some 3 to 4 attempts, 2 to 3 times these questions came. These questions came. They used to give 3 statements and they used to ask us whether it is covered under deposit or not. So we completed 5 points. Next one, commercial papers also completed. Next, seventh one, share application money. Share application money. Shares meant for allotment. Any amount received and held towards subscription to any securities, including share application money pending allotment, so long as such amount is appropriated against the amount to due on allotment of securities applied for. Now, if you observe issue of shares, company will receive money from the public first. They will receive money first, and after making allotment, they will issue shares. Yes or no? Until they make allotment, can we call that amount as a deposit, sir? No, not at all. Until we make allotment, is that amount be treated as deposit? No. So any amount received towards subscription is not treated as deposit. Next one, excess application money or unallotted application money shall be treated as deposit. No, this is not a general point. This is an exceptional case. Just read along with me. If the securities for which application money was received cannot be allotted within 60 days from the date of receipt of application money, such application money or advance is not refunded to the subscribers within 15 days from the date of completion of 60 days. Such amount shall be treated as deposit under these rules. See, today I offered equity shares. I received money. When you read section 42, you will get to know this point very simple. So within 60 days, I need to make allotment, or else you can refund all those monies within 15 days from the expiry of 60. Sir, I didn't make any allotment, sir. I'm keeping that fund like that only. 60 days completed, sir. Now from 61st day onwards, is it a deposit, sir? No. You need to refund within 15 days. Sir, I failed to refund within 15 days, sir. Now this is treated as deposit and you need to pay interest on it at the rate of 12% per annum. Right? In section 42, we discussed same point, same issue we discussed in section 42 ma. So are you all getting my point? So any money received meant for the allotment of equity share or preference share is not treated as a deposit. But such allotment should happen within 60 days or else refund within 15 days from the expiry of 60. You fail to allot and you fail to refund within 15 days. In that case, it will be treated as deposit. Now, how this question will be asked in examination, sir? Company offered equity shares and company received money which was kept in a separate bank account pending for allotment. Is this amount treated as a deposit? No. And what is your answer? I mean, would you change your answer or is there any change in the answer? If company is not returning the funds even after expiry of 15 days, after completion of 60, now this will be treated as deposit. Next, coming to the 8th point, loan from director. Loan from director, any amount received from a person who at the time of receipt of the amount was a director of the company or a relative of the director of the private company. That means, public company can take loan from the directors. Private company can take loan from both directors as well as relative of the director of the company. Understood? So, they're having very limited source of finance. Private companies are having very limited. They can't go with public. Yes or no? Tell me. Can they go with public, ma? No, private companies are prohibited from inviting offers. They can't invite offers from public, right? So they can get money from the directors or relatives of the directors. Now the point is, any money received from the director, in case of private company, along with the director, relative of the director, is not termed as deposit, but you need to satisfy two conditions. If these conditions are not satisfied, then it is also treated as a deposit. So what is that condition, sir? The director is required to furnish to company a declaration, at the time of giving a money, a declaration in writing to the effect that the amount is not being given out of funds acquired by him by borrowing or accepting loans or deposits from others, and the company shall disclose the details of money so accepted in the board's report. What are those two conditions, sir? At the time, company taking money from the directors, along with money, they need to take a declaration. The declaration should be written by director stating that whatever money I am giving a loan to the company, it is not out of borrowed funds, it is purely out of my savings. Over a period of time, yes, you can check my income tax returns or you can check my assets. So over a period of time, whatever I'm having, whatever money accumulated, that money I'm giving as a loan to the company. This is not out of borrowed funds. Sir, you may ask me, he may furnish fake declaration. No, sir. Actually, he borrowed money from public. Directly public can't give money to the company. Public can't invest their money into the company directly. They need to follow certain rules and regulations. Yes or no? So direct channel not possible. No, sir. That's why public may finance director of the company and director simply acting as an intermediary. Director diverting funds to the company, sir. This is possible. That's why we are expecting a declaration from director that this is not out of borrowings, this is purely out of savings. Now your doubt is, what if director gives a fake declaration? He will be punished at under section 447, fraud. Are you getting my point? So they may use director, public or company may use director as an intermediary to get funds from the public. If this happens, definitely penal consequences would be very high. So that's the reason, director can lend money to the company. Director can lend money to the company, but he need to give a declaration and disclosure of the same should be done in board report also. Understood, ma? So parties, one more party added, that is director. Next, bonds and debentures. So from parties point of view, we discussed government, banks, foreign government, and then intercorporate, and then directors, public financial institutions. From instruments point of view, we discussed shares, and now we commercial papers, and now we are going to discuss bonds and debentures. So secured debentures or bonds, any amount raised by issue of bonds or debentures secured by first charge or charge making pari passu. So for the time being, ignore these words. I'll give you 100% explanation with respect to these words in registration of charges. With the first charge on any assets referred to in Schedule 3 of the Act, excluding intangible assets of the company. That means, straight away, secured debentures, secured bonds are not at all deposits. They are not treated as deposits. But, secured, we call them as secured. We need to provide some assets as a security. That assets should be tangible assets. Are you all getting my point? See, company having some tangible assets like, land and building, plant and machinery. They offered land and building, plant and machinery as a security to the debenture holders. Now, such debentures are treated as secured debentures. They are out of deposits concept. They are not treated as deposits. Sir, in that case, all unsecured debentures comes under deposits, sir. Wait a moment. Let me finish BC points also. B point. Convertible debentures, convertible bonds into the bonds, debentures compulsorily convertible into shares of company within 10 years. However, if such bonds or debentures are secured by the charge of any assets referred to in Schedule 3 of the Act, excluding intangible assets, the amount of such bonds or debentures shall not exceed the market value of assets as assessed by the registered valuer. But let me tell you a point in a clear manner. Secured debentures are not treated as deposits. Fine. Yes, sir. Unsecured debentures. In that unsecured debentures, if you observe convertibility, sir, they might be unsecured, but these are convertible debentures, sir. Within a period of 10 years, yes, company is going to convert these debentures or bonds into equity shares, sir. Then also this is not a deposit. But coming to the security point of view, we had a condition that if you are issuing, some 1 crore worth debentures, 1 crore worth debentures, you need to offer security. That means, assets which you are providing as a security, this security amount should be greater than or equal to debenture amount. That means the assets I'm giving you as a security, their value, the market value should be greater than or equal to the debentures money. Then only such debentures will be treated as secured, and such secured debentures are outside the scope of deposits. Are you all getting my point, students? Everyone? So coming to the debenture, secured excluded, convertible excluded. Sir, in that case, non-convertible unsecured debentures are treated as deposits, sir. Wait a moment, let me finish C point. Any amount raised by issue of non-convertible debentures not constituting a charge on the assets of the company and listed on a recognized stock exchange. That means listed debentures are also outside the scope of deposit. Listed debentures are also outside the scope of deposit. So simply, secured debentures not a deposit, convertible debentures within a period of 10 years from issue not a deposit, listed debentures also not a deposit. That means, unlisted plus non-convertible plus unsecured debenture will come under deposit concept. That means they need to follow section 73 to 76 A. Everyone, secured debenture not a deposit, provided value of security you provide, it should be greater than or equal to the value of debentures. Next, convertible not a deposit, but such convertibility should happen within 10 years of issue. And third point, listed debentures. Next, 10th point, security deposit from employees. Any amount received from an employee of the company not exceeding his annual salary. Suppose if you can observe, cashier role in a company, very crucial. So there is a chances of manipulating the funds, yes or no, depending upon the nature of the job. Company use it to take some security deposits from employees. Security, if employee if he fail to fulfill his responsibilities, or if employee fails to, if he is negligent, as a result we are going to suffer loss. Now what we will do, we will forfeit that deposit, we can mitigate the loss. So depending upon the role of the job, nature of the job, companies use it to accept security deposits from employees. Now these security deposits are not treated as deposits because they are accepted as a security, not as a purpose, not as a business advance, not as a business loan, right? Amount received from an employee of the company not exceeding his annual salary. This is the crucial point. That means, all deposits from employees are not exempted. They're not exempted. They're not covered under exempted category. Only few, that is, deposit amount not exceeding annual salary under a contract of employment with the company in the nature of non-interest bearing security deposit. Obviously, security deposit, do you think on that banks will pay, do you think companies will pay interest on it? For example, a rental deposit. Have you heard about rental deposit? If I want to take a property on let out basis, I'll generally speak with owner of the house. So now owner will ask me, sir, pay me 2 months advance, 2 months deposit, 2 months of the rent, make it as a deposit. Yes or no? Do you think owner will pay interest on the 2 months deposit, 2 months rental deposit? No, they're generally non-interest bearing deposits. Are you all getting my point, students? They're generally non-interest bearing deposits. Now the point is, any amount you receive from the employee of company not exceeding annual salary is also covered under exempted deposit. That means these chapter provisions are not applicable. You can see example here. Rupees 2.5 lakh received from Mr. Raghu, an employee of the company who is drawing annual salary of 2 lakhs under a contract of employment with the company in the nature of non-interest bearing security deposit. The amount received by company from employee will be considered as deposit in terms of subclause 10 of the said rule, as amount is more than his annual salary under a contract of employment with the company in the nature of non-interest bearing security deposit. Understood? Suppose, if security deposit is exactly 2 lakhs, now this is not treated as deposit. Next one, from trust. Any non-interest bearing amount received or held in trust, it is also not treated as deposit. Suppose I'm having I created a trust to promote educational activities, to promote some uh, I want to promote some education. So in all rural areas, all the students, all the children should be educated. That is our main objective. So for that, we need to build schools. We need to hire staff, trainings. I mean, teaching staff. Yes or no? For that, I mobilized funds and I created a trust. So total that money is, for example, 10 crores. Now what I did, I went to Reliance Foundation company. So Reliance Foundation is also engaged in the similar activity. No, I deposited 1 crore with Reliance Foundation. So this is my primary objective, but because of my day-to-day activities, I'm unable to concentrate on trust activities. So I want to appoint you as a trustee, sir. To this 10 crores, I want to appoint you as a trustee, and you spend this 10 crores meeting these requirements, sir. Are you getting my point? No, whatever amount I deposited with Reliance Foundation, in the form of trust, held in trust, do you call it as a deposit, sir? No, it is not a deposit. And generally, on this, do you think they will pay interest, Sunday? No. Generally, interest concept, when it comes into the picture, when interest concept comes into the picture, I came to you, I want some funds to meet my business, requirements, to meet my business requirements. Please give me some money. I will invest in my business and I'll pay you some return. I'll give you some return. Yes or no? But when you see this 11th point, I'm getting some money as a trustee and I will spend this money according to the trustee requirements. So now, do you think will I pay interest? Simply, am I using that funds for my business? No, I'm not using that funds for business. Then why I'll pay interest? Logicless point, I'm telling you. So in case of trust, any amount you receive, non-interest bearing amount received or held in trust is not treated as deposit. Understood? Next, 12th point. Advances received for commercial transactions. We'll see the first point in 12th one. Business advances. An advance for the supply of goods or provision of services accounted for in any manner whatsoever, provided that such advance is appropriated against the supply of goods or provision of services within a period of 365 days from the date of acceptance of such advance. However, in case of advance which is subject matter of any legal proceedings before any court of law, the said limit of 365 days shall not apply. Sima, so far we read about a word called loan, and now here we are reading a word called advance. Do you think loans and advances both one in the same or different? Are they same or different? Tell me, are they same or different? Difference. How they are different? In loans, repayment is for sure. Suppose I went to bank, I took loan of 1 crore. I need to repay that money. Whereas advance, one customer came to me and he told about his requirements with respect to a product. We asked him advance. Suppose, Rolls-Royce company, if you take Rolls-Royce company, you take, they will manufacture a car based on your requirements. Yes or no? Now, that Rolls-Royce company, before starting work, they will take some money from the customer. And within 6 months time, they will finish the product and they will hand over that product. Now, do you think money, starting, the person gives some money, customer give some money to the Rolls-Royce company. Will you call it as a deposit? No, because this is adjustment. When I deliver the final product, I will adjust it with the final price. So if you take loan, repayment for sure, but advance, there is no repayment concept, only adjustment against final settlement. Are you getting my point? Now, if you take Rolls-Royce company, whatever money they are getting from customer, it is nothing but a business advance. Definitely they will adjust it with the final product, and this adjustment will happen, should happen within a period of 365 days from the date of accepting such advance. But there is some dispute. Customer told about one requirement. Company produced car, but fail to satisfy that requirement. No, there is a dispute between customer and company. That matter went to the court, and you all know, once matter went to the court, the final judgment may come within an hour, or within a day, or within a month, or sometime it may take years. So now how can you apply this 365 days logic there? So that's why any matter, if it is pending in front of court of law, then don't apply this 365 days concept. I hope everyone understood this point. Next one, advance for immovable property. Now suppose GMR Infra, they announced a project, infra project to the people. Yes, so this is total 100 acres of land, and we are going to construct some 120 residential independent flats. 120 residential independent flats in this 100 acres. And those who want to purchase this property, pay me the advance. So advance for immovable property. Now what GMR Infra will do? With this money, they will start construction of the houses. Now after a fixed period, what they will do? They will surrender the property. But construction of immovable property, do you think will it be finished in 365 days? Maybe possible, may not be possible. That's why this is different from above condition. Business advance is different, advance for immovable property is different. You're getting my point? So GMR Infra, advance received in connection with consideration for an immovable property under an agreement or arrangement, provided that such advance is adjusted against such property in accordance with the terms of agreement or arrangement. And you can see in capital gains chapter also, income tax, capital gains, transfer of property, where buyer will pay some 25% advance for purchase of property, and after 45 to 60 days, buyer will pay balance amount. Now seller will register the property in the name of buyer. Yes or no? Point of taxation, I'm talking about point of taxation, right? So now seller received some advance, right? Assume that seller is a company. The status of seller is a company. Now that company received advance for immovable property. Until they register property in the name of buyer, it looks like a debt to the company, but this is not a deposit. This is excluded from the concept of deposit. I hope everyone understood. Next one, security deposit for goods or services. A security deposit for performance of the contract or for supply of the goods or provision of services. If you take example of Geo, for getting Geo subscription, you need to pay some security deposit, right? Everyone. So those who are seeing these online classes, having a Wi-Fi facility, we need to deposit certain money with a Geo company. Then only they will come, they will install, they will give you Geo device, they will install everything. Yes or no? Now whatever security deposit you are making with the Reliance Geo company, it is not treated as deposit to that company. You're getting my point, students? Once you cancel the Geo subscription, they will give you that money. Okay. Next one, advances for long-term projects. Any advance received under long-term projects for supply of capital goods. You can take an example of GMR Infra. Just now I told you in B point, right? So I'm having 100 acres land. On this, we are going to construct buildings. Or you can take this L&T example. Suppose government of Telangana, they financed L&T. They gave some advance. Sir, you please construct a metro in Hyderabad. Covering almost some 100 kilometers area. So some three plans. Three phases. Phase A, B, C. Covering from this area to that area, this area to that area, like that. Three phases. Total 100 kilometers. Project cost, for example, 20,000 crores. Generally, when L&T complete the project, then only it is eligible to claim that money. Or at least phase wise, periodic completion of the project, they will get the money. That is purely sale revenue, service income. But the point is, initially, if government of Telangana is financing L&T, sir, you need to mobilize many resources. Okay, take this 2,000 crores as an advance, sir, and you start the project. So after completion of some 10% of the contract, we will pay you some money after deducting this amount. Are you getting my point, students? Everyone. So whatever amount L&T is getting from government of Telangana, advance for long-term project, they are also excluded from the definition of the deposit. Advances for AMC contracts. An advance towards consideration for providing future services in the form of warranty or maintenance contract as per the written agreement or arrangement if the period for providing such service does not exceed the period prevalent as per the common business practice or 5 years. Common business practice or 5 years from the date of acceptance of such service, whichever is less. What is this point? No, AMC, annual maintenance contracts. You will observe this kind of contracts, particularly in vehicles. Particularly, the students who are having vehicles, they can understand this point. At the time of purchasing vehicle, the seller used to provide AMC coupons, annual maintenance coupons, AMC. So having these coupons, what is the advantage, sir? Next time when you come to the service, we will provide you at lesser cost, at lesser prices, or we will provide some services at free of cost because of this coupon. Now this annual maintenance, these contracts, as per business practice, if you take vehicles concept, as per the business practice is 1 year. 1 year. They will give you these coupons only for 1 year. Now coming to the Honda companies, they are taking money by issuing these coupons and they're receiving money which is equivalent to 1 year warranty money, sir. Then this is not treated as deposit. Then this is not treated as a deposit. See, having this AMC is an advantage because whenever whenever machinery or plant and machinery underwent some repair, if you have this coupon, they will give priority to us. They will come and they will serve us. Now the point is, this is futuristic. Today I'm paying money to that company. I'm talking about company point of view. Company is receiving this money. This money is not for that day. This is not revenue on that day. This lasts for 5 years. Next 5 years or next 1 year, whenever this customer asks, the company should provide services. Now the concept here is company receiving advances under such AMC contracts are not treated as deposit, but the point is the amount should be equivalent to the maximum 5 years or any practice relevant in that business. Understood? Everyone, suppose in that business practice, generally companies will accept 2 years advance, sir. 2 years advance. No, 5 years is not relevant. 2 years is the relevant point. Maximum 5 years. Next one, sectorial permitted advances. An advance received and as allowed by any sectorial regulator or in accordance with the directions of central government or state government. I don't know, many of you might forget this point. When I explained section 29, demat form of securities under dematerialization, I told this point very clearly. For getting this demat facilitation, companies should pay money to the depositories. Initially, they need to pay 2 years fees as a deposit. You're getting my point. They're permitted under sectorial regulator. Suppose NSDL is providing you depository services. They asked you to deposit 2 years fees in advance. So sectorial permitted advances. Now from NSDL point of view, National Securities Depository Limited, NSDL company point of view, it is not a deposit because these are the advances permitted under SEBI rules and regulations. So very simple. If I want to facilitate, yes, I want to convert physical shares into demat form of shares. Now I need to deposit certain money with NSDL company. Now whatever amount received by NSDL, it is not treated as deposit. Next, advances for subscriptions. An advance for subscription towards publication, whether in print or in electronic, to be adjusted against a receipt of such publications. Suppose we entered into a contract with certain business magazine. Anything, the Hindu business magazine or Indian Express business magazine, and we told them, sir, next 12 months every Sunday, our advertisement should appear on first page, sir. So for this, we are paying you money of some 10 crores. Now, 10 crores received by this print company, that business magazine company. I'm talking about company. So company which is receiving 10 crores advance, this is also not treated as deposit. This is also one type of business advance. Or else, if you take Shrestha Commerce Education Private Limited. Imagine, this is not a company, but just imagine Shrestha Educational Institution Private Limited. Now we are getting we are getting money from the students. Money or people, students are taking subscription. People are taking courses under subscription model. On March 15th, on March 30th, one student took one course under subscription model for 6 months. Literally, after completion of every month, we will get, we receive money on day one only. We received money on March 30 only. But this is not completely revenue on March 30. This should be appropriated for the next 6 months. So for the next 6 months, company is liable to provide service to you. Yes or no? Company is liable to provide service to you. Now, if you take as on 31st March, there is certain liability on the company, because we received subscription money, for example, on March 30, and we promised you to provide service for the next 6 months. That means this revenue is for a period of next 6 months. Yes or no? As on 31st March, certain portion is a revenue and remaining portion is like a what? Obligation only, right? Now, whatever amount we received as an advance for the next 6 months, this is also not a deposit. Are you all getting my point? Okay, but take a print media as an example. So business magazine, I entered into a contract with a business magazine company. My advertisement should appear on the page 1 for the next 12 months every Sunday. For that, I paid 10 crores. Until 12 months get completed, certain portion is an obligation on that company. Suppose they provided services for 6 months and next 6 months they don't want to provide. Now they will return that money. Yes or no? So now the point is, until that publications get completed, that is a loan, that is a debt to the company, and that debt is not a deposit. Note, however, it is clarified that if the amount received under items A, B, and D above becomes refundable, A, B, D, and above. So A, business advance; B, advance for immovable property; and D, advance for long-term projects. So these 3 points, if they become refundable due to reasons that the company accepting the money does not have necessary permission or necessary approval wherever required to deal in the goods or properties or services for which money is taken, then amount received shall be deemed to be a deposit under these rules. So what is this point, sir? What is this point? Suppose Troy regulation. Let me take one example. Internet telecommunications. Yes, you can observe BSNL, you can observe Reliance Jio. Reliance Jio is a private sector undertaking. BSNL is a public sector undertaking. Government is running business under the name BSNL. And private people, they're running business under, their own companies. For example, Reliance Jio. Now this Reliance Jio, they received certain advances from the customers, and one fine day government made announcement that only public sector undertaking will provide telecommunication services. Private sector undertakings are not permitted to provide these services. Simply sudden change in government policy, sudden ban on private sector in providing telecom services. Now the point, Reliance Jio accepted 1 year advances. Now what company has to do? Sir, company should refund that money, sir. Exactly. That means refundable. Exactly. So until they refund that money, they will be treated as deposit. Until they deposit money, they'll be treated as deposit. Let me give one more example. 100 acres land I am having. 100 acres land I am having. And I promised residents of that city, yes, we are going to construct some 100 villas in that land. interested people deposit your money, and we got money from 100 people with respect to that 100 flats. Construction is going on. Suddenly, environment people raised an issue. Construction of building on that particular area damages environment, like that. Some litigation, some came into the picture, and court gave judgment that this project is illegal. Fine. Now what happens? What happens? I need to refund money to my customers. Yes or no? I need to refund money to the customers. Yes or no? So refundable. Now they will be treated as deposit if you hold that amount for a long period. Just see the point one more time. Due to the reasons that company accepting money does not have any necessary permission, does not have necessary approvals, wherever required, to deal in such goods, to deal in such properties, to deal in providing such services for which money is taken, then amount received shall be deemed to be deposit under these rules. Further, by way of explanation, it is clarified that the purpose of this subclause, the amount shall be deemed to be deposit on the expiry of 15 days from the date they become due for refund. Are you getting my point? So today court gave me judgment that this project is illegal. Refund all the money you received from your customers. Until 15 days, it is not a deposit. Until 15 days from that judgment, and till 15 days, I'm having a time period of 15 days. I need to refund that money within 15 days. So till completion of 15 days, it is not a deposit. But after completion of 15 days, if you're still holding that money, if you're not returning that money, then it will be treated as deposit. All the provisions mentioned under this chapter will apply. Everyone getting my point? So in the 12th point, we covered all types of business advances. Short term advance for immovable property, advances, security deposit for goods or services, advance for long term projects, advance for AMC contracts, sectorial permitted advances, advances for subscription. Everything we covered under this 12th point. Next, 13th point. Any amount brought in by the promoters of the company by way of unsecured loan in pursuance of the stipulation means condition of any lending financial institution or a bank subject to fulfillment of the following conditions. Sir, what are those conditions, sir? Loan is brought because of the stipulation imposed by lending institution on the promoter to contribute such a finance. And the loan is provided by the promoters themselves or by their relatives or by both. Above we completed director point. This is promoter point. Promoter other than director. Suppose if promoter is also a director, then the point which we covered above is sufficient. Here this person is a promoter other than director. What is this concept, sir? Say for suppose, company Adani Power Limited or Adani Ports Limited. Yes, Adani Ports Limited. They want to expand their business, total, recently this happened. Their estimation is some 20,000 crores. 20,000 crores they needed for expansion, and they finalized, banking channel. They freeze the decision. They took a decision of borrowing this money from the bank. Banker kept one condition. So we are ready to finance, but the total project value is 20,000 crores. We will give you finance up to 75% of 20,000 crores, and balance 25% should come from promoters. If promoters are giving unsecured loans up to 25% of the project value, then we will finance you remaining 75%, sir. Now, whatever unsecured loan, company is getting from the promoter, is not treated as deposit. So why banks will impose that condition? Because, promoters are the people who take business decisions. Yes or no? Suppose you had an idea and you came to me for some finance, and I'm asking you how much you invested in the project. Sir, my investment 0, sir. Then how can I trust that project? It's your proposal. If you're not investing funds, how can I trust you? And moreover, if you invest funds, I will be, I'll be in safe position. Like, this fellow will do business in a proper manner, in a prudent manner, because his funds also involved. This guy funds also involved. So I'll feel more comfortable in financing that project. That's what, promoter contribution. So bankers will finance the project up to 75%, provided 25% should come from promoter in the form of unsecured loan. This is the condition where banks will keep. Now, sir, this privilege of, this is not treated as deposit. How long this is not treated as a deposit, sir? How long it will come under exemption? Yes, how long? Until you repay the bank loan, until you repay loan to the financial institution, these amounts are not treated as deposits. The moment you repay loan to the bank, from that point onwards, this unsecured loan from promoter will be treated as deposit. Let me read C point, ma. Such exemption shall be available only till the loans of financial institution or banks are repaid and not thereafter. After repayment of loan, it may be treated as a deposit. Further, if promoter is a director, it will not be treated as deposit. We discussed this point earlier. So this is purely about non-director and who comes under the promoter category. So if you receive money from the promoter in the form of unsecured loan because of stipulation kept by bank, it is not treated as deposit until you repay such loans to the bankers. Next one, Nidhi company. Nidhi company, the main objective of Nidhi company is to promote saving habits among the members of the company, right? Now, whatever money they saved, they will deposit in Nidhi company. Yes or no? For such deposits, already separate set of rules and regulations were prescribed under section 406 of the Act. Again, why these conditions? So they will come under special category deposits. So yes, Nidhi rules will apply. These chapter rules will not apply. So whatever amount received by the Nidhi company, straight away they are exempted deposits. Next one, chit fund companies. Suppose Sriram Chit Fund Company, Sriram Chit Private Limited. The amount received by way of subscription in respect of chit companies under Chit Fund Act 1982, they are also not treated as, they are also not treated as deposit, exempted. Collective investment scheme, say for suppose mutual funds. Best example, mutual funds. Now, I want to make profits. I want some returns. But investing in a particular security is a risky. That's why, I went to Aditya Birla Mutual Funds. I deposited my money. For that, they gave me some units, scripts. They gave me some units. Okay, fine. From Aditya Birla company point of view, will this come under a deposit? No. So any amount received by a company under any collective investment scheme in compliance with regulations framed by SEBI, then also that won't come under deposits. Next, 17th point. Almost we are near to complete this exempted deposits. So after completion, just revise them quickly. Very important from true or false point of view. No need to mug up, but conditions are very important. So an amount of 25 lakhs or more received by a startup company by way of convertible note. That means, convertible into equity shares or repayable within a period not exceeding 5 years. Either convertible or repayable within a period of 5 years from the date of issue in a single tranche from a person, then also it is excluded from the definition of deposit. Here conditions are very high in number. Just see, two conditions to be satisfied. One is single tranche. That means under a single transaction, startup company should receive 25 lakhs. This money either should be repaid within 5 years or it should be convertible within 5 years. It should be either convertible into equity within 5 years or it should be repayable within a period of 5 years. If either of these conditions satisfied, then it is not a deposit. Suppose, sir, under single transaction I received 30 lakhs, but I want to convert them after 6 years, sir. Now it is a deposit. I want to repay them after 6 years, sir. Now also it is a deposit. Okay, 5 years. Particularly startup companies, not to other companies, This provision is only with respect to startup. So what is a startup, sir? Startup means a private company incorporated under Companies Act 2013 or earlier act and recognized as such in accordance with notification number GSR 180E dated 17th February 2016 issued by the Department of Industrial Policy and Promotion, Ministry of Commerce and Industry. Okay, after fulfilling the requirements of GSR 180E, General Statutory Rules 180E, which was dated 17th February 2016, if you satisfy these requirements, you'll be given a license called startup. That's it. And when you receive money from any person, under a single transaction of rupees 25 crores, then it won't be treated as a deposit. Convertible note means an instrument evidencing receipt of money initially as a debt, which is repayable at the option of the holder, or which is convertible into such number of equity shares of startup company upon occurrence of specified events and as per the other terms and conditions agreed to and indicated in the instrument. Next one. So simply, what is a convertible note? It's a debt to the company, but 5 years time tenure is given for repayment or for convertibility. But this option, that holder will exercise, and company should either convert or company should either cancel. Company should convert or company should refund it. REIT, IFIT. Last point, Sima. Any amount received by company from alternate investment funds, domestic venture capital funds, infrastructure investment trust, real estate investment trust, or mutual funds registered under SEBI, there also comes under exempted deposits. Why? Because for them separate rules and regulations are already in force. Now these are like general conditions for them. So there is a dilemma among such trusts, whether to follow this chapter rules or other rules. So simply to avoid such confusion, sir, under Companies Act chapter, this is exempted, sir. No need to apply chapter number 5 rules. You follow your applicable rules and regulations. So with this, exempted deposits completed, ma. First of all, what is a deposit? Any receipt of money in the form of loan or deposit or any other form of money, it is treated as deposit. But certain categories were excluded. This list is not complete. In future, 19th item may come, 20th item may come, but before coming, before introducing such points, RBI consultation is required. And 18 points, what are those 18 points? Governments, foreign governments, banks, public financial institutions, and intercorporate loans, and then promoters, directors. These are persons. Instruments point of view, shares. Next one, debentures, bonds, we discuss. Next we discuss business advances, right? And then we discuss companies, startup company, nidhi company, mutual fund companies, real estate infrastructure investment trust. Understood? This comes under company category. So with this, we just finished deposit. In the next lecture, we are going to discuss about who is a depositor, to what extent company can accept deposit, and what are the procedural formalities to be fulfilled in accepting the deposits. All this stuff we will discuss in the next class. Take a small break and watch next video. Until then, tata.